to join. Okay, so thank you everyone for joining us for the 4th edition of the Fundok Talks. We've decided to rebrand it from webinar because everyone's got webinar OD syndrome through 2020. It's been a bit of a while since we've had the last one of these talks, but it's because we've been waiting to cook up a very, very cool topic and panel for you guys. Today, we're going to be discussing all about financing, money, investment that goes into hospitality real estate in the current landscape and looking forward. Like I said, we have a great panel for you guys. I'll start off by introducing them. There's Ahmed Ghazar, who's the COO of the Egyptians Real Estate Fund. We've got Noel Homsi all the way from Dubai. She's the lead for industry lead for the hospitality industry at Grant Thornton in Dubai. And of course, Youssef Samma, who's actually one of the most recognizable figures in the startup space in Egypt. He's the MD of Falak Startups in Cairo. We'll be asking them for their perspective on various topics. So I'll start by asking you, Ahmed, in general, as a person who works closely with the actual physical assets investment in whether it's residential, commercial, or hospitality real estate. What is your take on the events of this year? Where do you see the industry moving next year? If you can just let us know.
So first of all, thank you very much for having me. I'm really delighted to be on this panel, and looking forward for discussing this very interesting question that has been interesting even before the pandemic time. For the hospitality, I believe this is the first time that through the region, all the big players do have mega backed developments. So you have Saudi with the Vision 2030, the UAE with the Expo, Qatar with the World Cup, and Egypt with the opening of the new museum, the new cities, and currently the latest is the Sovereign Wealth Fund again coming in the residential and the hospitality. So it was already interesting asking this question before the pandemic. So, and what happened that the COVID have expedited a lot of disruptions that have been around and introduced a new layer of disruptions. What's going to happen, that's what we're looking to find through such talks with the colleagues. And for the hospitality, the main challenge in fundraising and financing currently is that both sides of the valuation is very fluid. So you have increased costs to adhere to the safety and health regulation. And then on the other hand, you have definitely very dynamic projections for ADRs, occupancy, and the challenge is which of those will stay and which of those are going to rebound back to the pre-COVID layers. So in my opinion, leisure tourism is going to revive, go back maybe faster, but all the real estate assets currently, in my opinion, is going to be affected mainly by the office and the work. So, and that would have firebacks in the hospitality, in the residential, and the retail. So before the COVID, we've been hearing a lot about everybody moving to the service department, the staycation. Now we're working about workation. And so that's going to be the driver of the change and all asset classes, it's going to be driven from office and mainly office sector.
That's very interesting. And Noel, you work more closely in the actual investment of and financing sort of angle when it comes to that particular industry. What's your take on where we're going or where we've been?
Let me tell you about what we're seeing now in the market. So far, investors have been holding on to their assets. We're not seeing lots of distressed assets, or not even one distressed asset in the market yet. What we're seeing is more of valuation exercises or market sounding exercises that are starting to appear, which means that investors or hotel owners are starting to wonder what their assets are worth, starting to consider their options, and so on and so forth. On the other side, just like in every crisis, there are investors who have, let's say, high risk appetite. So they keep an eye on these discounted opportunities here and there. And we estimate that the market today or hotel values are around 25 to 30% lower than 2019. And these discounts, I don't know if Ahmed agrees, but these discounts won't recover until maybe the end of the recovery or the full recovery of the sector. And if you know that hotel values had started to decline since 2008. So the discount between pre-2008 and 2020 is huge. So as I said, we're not seeing distressed assets. We're seeing investors wanting to find these acquisition opportunities, which we estimate to start seeing in the market in the next 12 to 18 months as owners would want to cut their losses and exit their investments. Now, in terms of development, as Ahmed mentioned, there are big developments happening, especially the Saudi 2020, with all the giga projects that come with it, whether Al Ula, Red Sea. I'm sure you've heard of so many of these giga projects. And recently, we've heard also about the ministries, the tourism ministries, tourism development fund that was set up to finance up to 160 billion riyal. That's around 43 billion dollars, worth of hospitality projects in Saudi. So this is huge. And when you see the government doing so much, investors, of course, get confidence and comfort in investing themselves as well. We've seen a few hotel openings happening in the past few months, which is surprising to me, but I mean, not so surprising also, because these hotels were already in the pre-opening phase, and what can they do? They're already on the last milestone. They can't just change their plans last minute. But I think new developments are being put on hold slightly until we have a clearer view of what's going to happen. And this is healthy, especially given the oversupply that we've been seeing in major cities such as Dubai, for example. So this stop in development will kind of adjust this supply and demand difference.
I'm honestly surprised that the discount that you're seeing is just 25 to 30%, considering occupancies, the occupancy levels have. But I guess this is a very optimistic sign in a sort of pessimistic sense that the damage is only this much.
And I think these major, I think these major big giga projects, especially driven by the government, are the ones that are keeping this discount from even growing further. Yeah,
that's interesting, and I wanted to touch on that giga project issue with Yusuf. So we have on the one end of the spectrum these massive developmental projects and initiatives taken by sovereigns to reshape their economies, especially when it comes to the GCC, moving away from the hydrocarbon economy. You, on the other hand, are part of an ecosystem that's doing sort of the same sort of goal, in the sense that we're trying to empower youth and we're trying to generate real GDP coming from real sustainable sources, but at the other level, at the actual organic promotion of the startups. Egypt historically has been a hospitality strong sector. What has the startup scene from a hospitality perspective looked like for you guys at Falak in 2020 and looking forward to 2021?
Well, thank you, Nasar, for the opportunity, and very happy to be part of this panel. So, like you said, like Falak Startups is an initiative under the Ministry of Investment and International Cooperation. So the idea was to support the tech ecosystem in Egypt and help grow the economy through these new startups, new tech solutions. And like you said, hospitality and tourism is a main sector in Egypt. So strangely, we haven't, even before 2020, we weren't seeing enough companies come up tackling these types of gaps in the market and offering new solutions to that very big sector. But when we do, we try to support these companies because we believe they have a big market to address. And for us in 2020, of course, we're not an expert on the hospitality and the tourism in general industry, but we believe that it's a major industry. It definitely is affected by what's happening, but for us and the tech angle we look at, we believe this is a very good opportunity for us to support these startups because the big players and even the small players and everyone in that sector is now open to any kind of solution that could help them become more efficient in terms of managing their expenses, their costs, outsourcing certain services. From the small players to even the big players right now are listening to everyone who can offer solutions. So it's actually an opportunity for us to support startups like Fundok who can offer these types of solutions and these efficiencies in the supply chain to be able to build something so that when the things are back to normal, and we believe they are going to be back to normal, and these industries are going to grow back to what they are and even bigger, these tech solutions and these startups are well positioned as new players in the market.
Yeah, that's yeah. I mean, we also believe so as well in a sustainable, real, robust recovery in hopefully in 2021. So yeah, echo that view. Ahmed, you work in the traditional sort of investment angle, investing in the real estate. How valuable? It's a two-tiered question. So how valuable are these new tools, these startups, potentially for you as an investor in physical asset? Are these solutions that are coming up? Do you see any value in cooperating with these solutions moving forward to sort of facilitate a higher return on investment in physical asset? And the second part of the question I wanted to ask you is, in terms of fundraising for funds, do you think that there will be a general pan-MENA region recovery, or might there be a disconnect between the GCC and North Africa in terms of pace of recovery, particularly in an investment perspective for the hospitality sector, moving on beyond 2020?
So the first part of the question is like the new tools and the innovation that's currently happening. I would see that, as we said in the beginning, the big guns, the big projects, these are backed by the government and tied to strategic initiatives. So these bullets left the barrels. Those guys can get financed. They are backed by the government. The move is going to happen, and all of the trends that we're seeing now is going to be translated into more of, again, the trends of serviced apartments, increased demand in the short and medium stay. And again, and that's specific to Egypt. Currently, we're seeing an increase in the yields in residential rentals, again, with the lowering of the interest rate and the introduction of a property tax. So again, this is creating supply on the apartments, the residential sector. And everybody knows that if you move to the short term, the yields are usually higher. But the challenge usually in the market. Previously, everybody would have preferred to have signed 2-3 years contract for his apartment and with lower yields but less headache. So nowadays, with these current platforms and these current services, people are starting to explore having higher yields for the properties without the headache. So I believe that this is going to be a key ingredient in enabling all of these stock in Egypt, because Egypt do have a huge stock of closed apartments. But nowadays, everybody is motivated to enable these apartments and get them into the market. This is where I believe that these platforms and this innovation in technology is going to facilitate this demand. That's the first one. And the second part of the question?
Yeah, we're talking about, and I'm going to ask Noel the same question as well when you're done, but the pace of recovery, whether it will be a pan-MENA recovery in terms of fundraising activity, funding, financing activity for the sector, or do you reckon that there might be a decoupling between the GCC and North Africa as we move on beyond the
from the finance and the investment side?
Yeah.
Honestly, that's the million-dollar question, because the thing is, currently the major change right now is there is like severe behavioral changes in the customer appetite for vacation, for tourism, and definitely, in my opinion, that what have changed is not going back to the pre-COVID is the travel, business travel, and anything driven by business. So there would be changes. Again, I believe, as Noel said, there would be innovation in the valuation models, and definitely an opportunity for new ways of spotting opportunities, because even geography have changed. So we see lateral move in demand for suburbs and away from city centers. So there will be a lot of balances to happen first before we are able to understand how things are going to go in the near future.
So before I spin this question on to you, Noel, I'd just like to take a second and do a housekeeping note for the attendees. Anytime you want to send us a question, please use the Q&A function at the bottom of your screen. Once we are done with the questions, the direct questions to the panelists, we'll get to your questions. So feel free to shoot out a question at any point in time. So back to you, Noel. So I'm very interested in this idea of, historically, the center of gravity for investment in real estate across the MENA region has been the GCC. I mean, whether directly or indirectly through, or historically, recent history, through mega developers such as Emaar in the UAE, Qatari Diyar, etc. So we've largely seen the sectors move more or less in step. Is this something that you believe will continue moving forward? Is the rest of the Middle East going to have to wait for the GCC to recover? Or do you think that there will be different fundamentals operating at sufficient strength in the various sectors to decouple potential recovery?
So as Ahmed said, it's $1 million question. What we can talk about is actually the factors that affect this recovery and how eventually they will play out. So one, we've been talking about the domestic market, right? We said the domestic market will recover first, and then the regional, and then eventually the international. Of course, business travel kept aside. We're talking about leisure and people going back home or to their families. So if we talk about domestic market, we want to know, or what would affect this recovery is how big the market is. Is Egypt as a market enough as a domestic travel market enough to feed in those hotels or the supply that we have or not? Is the UAE enough? And then the next question will be the travel corridors. Which countries have less and less travel restrictions between each other? Where are the destinations that don't require 14-day quarantine? And this will lead to a faster recovery. Now, on the other side, in terms of investment confidence, which is somehow affected by these travel behaviors, there's also, as I said, the government support, government tourism development funds, such as the one in Saudi, government support in terms of procedures, licensing, in terms of the government even investing themselves and paving the way in front of the private investor and giving a kind of how to say, like preferential treatment for those investors who abide by the tourism vision or the tourism strategy, such as the Oman tourism strategy, I think it's 2030 as well, such as Vision 2030 and so on and so forth. And Ahmed touched on an important point that I want to actually speak about, which is people moving away from cities and going to less crowded spaces. And this is a trend that I love personally, and I'm totally interested in it. But also it's a trend that we've been seeing, not necessarily created by COVID, such as the workation, trend, but it has been so much accelerated by COVID. So it had started before COVID, but now all of a sudden it blew out of proportion. The staycation market, especially here in the GCC, has done better than 2019 even. So they've crossed their budgets, they've broken their records. And this is not only because of COVID. As I said, it got accelerated, but it is here to stay. And people don't want to, let's say if they're going on a staycation, they don't want to drive 1 to 2 hours away from their homes only to find themselves checking in another room in between 4 walls in a building in a regular hotel. What they're looking for is meaningful experiences. They want to connect with nature. They want to connect with themselves, maybe go on meditation boot camps. They want to eat organic, local produce. They want transformative or transformational experiences, which means when they go back home, they don't want to just come back with a photo of, I don't know, the Eiffel Tower. No, they want to come back home feeling transformed themselves and maybe engage in philanthropic activities. So yeah, that's a major trend we're seeing. And I think the country or the market that's gonna foster or facilitate or encourage such investments is the market that will recover first or recover faster than other markets. So the market that's going to offer experiences that address the market needs and the guest real expectations.
Okay, this is I mean, fantastic reply. Thank you for that. And it poises me very well to throw the ball to Yusuf, because anytime we talk about trends, you know, you guys working with startups on the cutting edge of pushing the boundaries of services, of innovation. Have you seen any particular movement in your exposure to startups working in hospitality that are in line with these concepts that Ahmed and Noella were talking about, this deurbanization, this holistic travel, things of the sort? Is this something that you've been noticing, or how have things seemed from your perspective?
Yes, like definitely we're seeing more trends of people when it comes to this to the industry, hospitality and leisure and travel. We're seeing, so we made 2 investments this cycle, early in 2 months, one in Fundok and the other one in a travel activity experiences platform. And even though for the second one, it might have been a risky investment for us, but what convinced us is the trend we're seeing of people domestically trying to explore Egypt more, especially with what's happening in 2020 and in general, this has been a trend that has been up and coming. People wanting to explore new activities outside of Cairo, in the suburbs, in different areas, different experiences, not just go stay in a very nice hotel, but try to different experiences and different activities. And we're seeing so even internationally with Airbnb, for example, and them offering the Airbnb experiences. And so this has become more common, whether domestically or internationally, and it's definitely growing more in Egypt domestically. And so we want to support these types of trends, and we want to support the startups that are offering these types of solutions. And we're seeing more and more of these people, and because Egypt is a big market, and the problem is sometimes when startups come up with a solution, they're offering a service to a very niche part of that market. But with the changes and trends that are happening, this niche is becoming bigger, and the people who are interested in that type of experience and in that type of service is becoming more and more bigger. So it becomes a good investment for us to support these trends and these startups. So that's definitely happening more, and we're very happy with what's happening.
Excellent. So I'll do a last round of questions before we go into the Q&A for everyone. Ahmed, back to you. When do you see a real recovery in the sector from an investment perspective, from an appetite to really put money and drive prices, asset prices north again? Is this something that you see taking a couple of years? And we're talking about Egypt at the moment, of course, from your perspective. Is this something that you see changing in the next 6 to 12 months, or will this be a longer term recovery in your opinion? Watch out what you say. I'm going to go to the market and put my money straight away. So this is
no, for the existing hotels and for the existing sector to recover, again on the leisure part, in my opinion, is the moment that people start feeling that it's safe to travel, it's safe to stay in a hotel. It's gonna rebound very strong, local and international. The moment when this is gonna happen, it depends definitely on when the vaccine is gonna come out, when exactly people would feel safe to travel. So for the current assets to go back to occupancies and recover the ADRs, that would take, I would say, 6 months from the time that people would feel safe. Investing and in new hospitality projects, I believe on the big 4 and 5 star level, these are going on anyway in Egypt because of all of the government backed projects. So we're seeing the renovation of the old hotels, the Shepherd, the one in the Opera. We're seeing the Sovereign Wealth Fund overtaking Crown Jewel assets. There are a lot of talks that it's gonna be transferred to hotels, and again the new cities. So these are gonna happen. On the middle and the medium size hospitality new investments, I believe this is gonna take some time. There isn't a specific number, but for the market to open up again for new hotels, and I believe that the model of good location, prime operator, you do the valuation and you move forward. This is again gone for a while. Moving forward, it's going to be a lot of innovation, new concepts, and again, there might be changes into new destinations. These behavioral changes would push a new destination that is currently undersupplied. But if we're talking about the major cities in Egypt, Sharm el-Sheikh, Hurghada, Cairo, Alexandria, to have a new 4 or 5 star hotel other than the ones in the pipeline or the ones backed by residential developers who are capturing the value on the residential side, it would take some time. But again, as I said, new serviced apartment, new platforms that will enable residential units owner to achieve short-term rentals. This is going to see a spike. But the $300,000-$400,000 key room hotel, it will take some time. So I see that the movement is going to be on the serviced apartment side, on the mid and short-term stays, and here in Egypt there is an undersupply for those.
Yeah. Noel, you spoken about staycations exceeding expectations, exceeding 2019 numbers. Is there anything else that was surprising in 2020 that you guys look back on and say, considering the circumstances, this is an interesting outcome that we wouldn't have predicted? Has there anything stood out for you?
I think the staycations was a surprising outcome, as you mentioned, not only in terms of occupancy, but also in terms of ADRs. We're seeing, I'm going to give you an example. We're seeing a one-bedroom tent of upscale, not even luxury level, in Sharjah. I don't know if you know, Sharjah is an adjacent emirate to Dubai, selling at around 4,000, 5,000 dirhams a night. That's around $1,300 a night, which is crazy compared to 900 dirhams in 2019. So this is really, really unseen, not only in the staycations market, but also in the Sharjah market that previously couldn't have commanded such high rates. But if I want to talk a bit about what you asked, Ahmad, or how are we going to see, let's say, the region growing or the region recovering? Do we need to wait for those tourists to come back? Do we need to wait for those business travelers, which I personally don't believe are going to recover, but I'm a bit pessimistic on that front. It is my personal view that mass tourism is long gone. So the strategy should not focus on waiting for those travelers to come back. If we compare the travelers or the passengers that landed in Dubai in October 2020 compared to 2019, it's only 15% of 2019. So, I mean, how long are we going to wait for these numbers to recover? So let's put this aside, because first, it's not under our control. It relies heavily on external factors, on the vaccine, on travel restrictions, on purchasing power of travelers. So if we look at the other side of the equation, which is tourist spending, which affects ADR, which is contribution of tourism to GDP, this can be achieved through other, let's say, factors or variables, which is attracting tourists that spend more, attracting tourists that stay longer. And how can this be achieved? Through, we go back to Yusuf, through innovation, through products that push the boundaries of guest experience, through products that also help these hotels, these hoteliers, these stakeholders in the hospitality space lower their costs without compromising their guest experiences, help them streamline their processes to reduce their risks, and so on and so forth. So I think it should all be fueled by innovation, and the market or the country that knows how to leverage these minds. I think Egypt is doing great. But the country that's going to leverage and capitalize on these minds and these entrepreneurs is the market that will grow faster as we move into the future.
I really love an optimistic perspective, and I love the fact that innovation, it seems to be the consensus driver for moving forward. So we'll close off the structured questions with you, Yusuf, I think quite aptly. you guys at Falak have done something that's quite rare, which is take a bet on hospitality startups in a very turbulent year for the sector. From a startup's perspective, do you believe that there exists sufficient institutional appetite for fundraising, or do you think startups working in the sector need to be as innovative in their fundraising requirements as the actual products that they're pushing as well, in your opinion?
Well, unfortunately, I think there's a bit of reservation when it comes to institutional investors supporting hospitality-backed startups and solutions. I think like everyone, because they have other opportunities to look at, they have other industries to support. So when it comes to that sector, they might be a bit skeptical or reserved, but there are some appetite still. And I think the ones that can see the opportunity of backing the right startups now and how that will be beneficial in the very short term are there. I think it definitely has to do with how things evolve with the vaccines and the whole industry in general. And in a few months, hopefully, when things start looking positive, we'll see more institutional investors coming into the scene again. However, I think it's a good time for these startups to try to gain more traction, try to work on their infrastructure, on developing their product in the meantime, so that when these institutional investors start showing up again, they'll be more ready and more prepared for the market. And in Egypt in general, I think it's positive that we only have 200 cases per day, so we're not that much hit when it comes to the market. Yeah.
Are these real cases, or are they the announced cases?
They're the announced cases, yeah.
They're announced and they're real. So no, I mean, I love ending on an optimistic note, and we've gotten a couple of questions, so I'll go through them quickly. One is from Khalid, so thank you for the question, Khalid. He wanted to ask the panel in general about the repurposing of real estate assets, specifically hospitality and commercial classes. So Ahmed, I believe you sort of addressed that issue earlier about the excess stock. Do you think that this will become a real thing moving on? Is this something that you guys are seeing working in the industry about this repurposing of these assets? Is this something that you're actively looking into, or is this just all theoretical at the moment?
So he's asking about hospitality and commercial assets. For residential, I believe that this is, yes, that's a trend that we're spotting, and it's driven by fundamentals, the increase in the yields because of the uncertainties. Everybody is reluctant to move into a new house, sign a long-term lease. So yields are going up and interest rates are going down. And again, the introduction of the property tax. So owners are motivated to move on that. For the hospitality and the commercial assets, that's the theory part. That's my opinion. My opinion is that moving forward, there would be not necessarily repositioning, but there would be they would need to complement each other. So yes, a short-term stay residential, coupled by maybe a co-working space. So we're gonna see like these repositioning that would complement each other. And in offices, repositioning for offices, everybody's moving now toward smaller places, exploring co-working spaces, because again, time of someone would come and buy a building at 12,000 square meter. Again, I believe this is gone for a while. So, but I believe it's going to be like complementing and building synergies between the asset classes.
If I can jump in here, Mohammed, because we're experiencing or we're getting interest at Grant Thornton UAE from hotel owners to not yet repurposing the entire hotel asset or converting it to something else, but they're starting to think of repurposing certain spaces within the hotel asset, such as the ballroom that now, I mean, who's gonna have huge weddings and huge meetings, or some F&B outlets if the hotel is heavily relying on having multiple F&B outlets. Some are thinking to convert them into, as Ahmed mentioned, co-working spaces. Some are thinking about converting them into entertainment rooms, gyms, also specialized gyms. So we're starting to see this interest growing among the owners, but we're also expecting the repurposing, let's say, activity or services to pick up next year. Once things get clearer and owners realize that the cost that they've already spent is sunk cost, no need to hold on to what they've built or what they've designed because it's not going to serve them for the future. And I'm definitely one of the people who truly believe in forgetting what you've already designed, even if you're emotionally attached to it, because, you know, especially private investors, they're emotionally attached to their projects and their assets, which sometimes take years and years to build and design. But I am of the true believer that if you keep an open mind, forget about all the years that you've spent designing and building this project, and think, what does the market need today? What will the market need not only today, in the next 5 and 10 years? Because this is what will keep your asset generating revenue and keep your ROI the way you expect them to be.
That's yeah. Again, it seems to be like innovation and re-elasticity of purpose is the subject du jour. We got a question from Hisham. It's historically regulators and EGOT had limited the investment and expansion hospitality sector. Do the panelists see this changing actively now? Is most investment in refurbishing happening through FDI or local investments? Noel or Ahmed, anyone keen to take that? Ahmed, start with you.
So
goes to EGOT.
Specifically, it's like, yeah, for EGOT, currently we're seeing the Shepherd being renovated through a foreign investor and a partnership agreement. And the other asset is the historical Opera Continental Hotel, and this is funded by debt from the bank. They signed a loan agreement, but I don't know of other examples. But not only FDIs, some of them, and the big thing is going to be again the asset classes, the properties that have been transferred to the sovereign wealth fund. I don't know. We don't know anything about them yet.
And for you, Noel, what do you reckon when you're talking about this repurposing of specific areas in hospitality assets? Do you reckon that this needs to be an owner-driven, individual case-by-case sort of investment, or do you think that it is setting up something like EGOT, the Egyptian company for hotels, tourism and hotels that currently own a lot of the Egyptian assets, is setting up something similar in the GCC economies might be a more efficient manner to effect this change if it is necessary?
I think it's all a matter of timing. It depends whether these repurposing will happen now, in the next year, in the next 2 years.
Just touching on that, it's like currently again, what we saw in a couple of deals that we were looking at, that the owner is trying to go into an asset-light model. He's trying to do in-kind participation in the fund by the asset, and he only gonna focus on the development and the operation. And not completely disposing the asset because he believes in the upside. But that's a trend that's currently might be explored at. Maybe sell part of the asset to finance the repositioning needed. We're gonna see innovation definitely in finance in the coming period in order to, and this is gonna happen when the government support is gonna stop to the tourism department. Currently, most of the governments are supporting the sector with holidays on loan repayment, with easy loans. So back to the first point, and this is why we're only seeing the 25% discount in the assets, because everybody is reluctant to seek finance, to strike a deal. But when reality hits and transactions start following, this is the time that we're really going to see the real impact of it.
Yeah, that's very interesting. So we've got two more questions. One of them was pretty much answered earlier, the one to do about investment in innovation versus keeping assets afloat. Maybe we can address that if there's time. But we'll do the last question quickly, and it's more again about the decoupling of the MENA recovery. I'll hit it off to you, Yusuf, first from a certain angle. So the question is from an anonymous attendee. It's about where we think which economies will recover faster across the MENA. So I'll ask you this. Historically, for Egyptian startups, the route has been Egypt, growth, and then if we're looking for regional expansion, then it's Saudi, UAE, Saudi. In your opinion, will this continue being the route forward, which would probably imply that Saudi is a fast recovery pace? Or do you reckon that when looking at the startups in your ecosystem, in your family, you'd advise them to seek expansionary scalability through other geographical avenues, whether it's domestic growth, Pan-African and Southern European? Is this something that you can share your thoughts with?
Well, even before like 2020, we were seeing startups try to grow outside of Egypt and try to move to the GCC, starting with Saudi and then the UAE, like you were saying, or even sometimes other countries. And it wasn't working that well before 2020. Scaling outside of Egypt is very challenging. The culture is very different in other countries. You require a lot of investments to be able to sustain your operations in other countries, and compared to your original operations in Egypt, it's much more expensive. So I believe that with what's happening, of course, the challenge is even more. And I believe like we're going to see more companies in Egypt and startups in Egypt try to first dominate the Egyptian market and not be very tempted to try and scale in other countries when they're not that ready and they're not well funded. And the Egyptian market is really very big if you're addressing the right market. If you're not addressing a very niche market, you have a very huge market to tackle, and then you can start looking at other countries, and then it comes down to what you're offering. Sometimes it's better for you to look at countries like Saudi, like Dubai, or Emirates, and sometimes it's new African companies, countries that haven't been considered before but are very similar to the current market dynamics in Egypt. So if you're offering a solution that is offering a new type of infrastructure, then you don't go to companies that have very well infrastructure. You go to companies that acquire new infrastructure and require alternative infrastructure solutions. If you're applying, and that is why Egypt, I think, the normal growth beyond Egypt is sometimes, and most of the times, not the GCC. It's countries that are similar to us in terms of a very fragmented infrastructure, and trying to do that, and not trying to come up with an application and a new service that has to apply on something that is not there in the first place. So like it depends, but I think in general we're going to see more companies focused on Egypt, and this is what we need right now.
Yeah. Taib, I think we've taken up a lot of our lovely attendees' time and our panelists as well. So I think it's a good time, a good place to end this discussion. We'll be doing more of these discussions, but before we sign off, I want to thank you all very, very much. Thank you, Ahmed. Thank you, Noel. Thank you, Yusuf, for your generosity in time and in insight. It really was a fun discussion. And yeah, so for everyone attending, we're going to be publishing this on our YouTube channel, and we'll be doing clips as well. So thank you very much for joining us, and we hope to see you soon. Thank you much. Thank you.
Thank you, Muhammad. Thanks for having us.
Our pleasure.
Thank you, Mohammed. Thank you. Thank you, everyone.
Bye-bye.
Thank you all. Bye. Thank you.
Bye.